But they do have a bit of news out today. AVA Risk Group announcing a new global agreement with a company called dormakaba that helps their distribution for their BQT security system division. Claude, I'll start with you. Have you heard of these guys and what do you think? And be nice.
Yeah, no, I have, and I have actually in the past owned shares in them. Actually, there's an old write-up on our website, A Rich Life, about AVA Risk Group by a fund manager that I admire, Steve McCarthy. And look, the thesis then was it was very under the radar and undervalued. You know, since then, the share price has gone up quite a lot, and a fair bit has happened. So I guess like the biggest thing that has happened in the last couple of years is that they have delivered on this large contract with the Indian government, which has definitely grown their profits quite considerably. So what these guys do, you know, is they have a range of different security solutions. They have the BQT business, which is mostly about secure locking, electronic locking, biometric locking, that kind of thing. And then they have the future fiber business, which basically has using fiber optic networks to detect perimeter breaches, and that's the Indian government that was one of those customers in a licensing model, which is very high margin for the company. So that's been great news. That's really skyrocketed the profits. And then what they've gone and done is they've sold their third division, which is a security services business, which was doing quite well and growing quite well, but perhaps had less to do with IP and was more a services business. So that means, I think, correct me if I'm wrong on this, Andrew, but I think they're at the moment come a 16 cents capital return. So even though the current share price is about 40 cents, if you buy now and hold on, in all likelihood, you will end up getting a 16 cents capital return. And so in a way, you're sort of paying 24 cents a share. So, one approach would be to, certainly the approach I would take would be to pretend the share price is sort of at the moment, 24 cents per share and analyze it on that basis. Now, if we do that, basically the company's going to lose a little bit of profitability for the business that it's sold. And on top of that, its existing fiber business it's coming off this large win from the Indian government. And so it is, even though they are trying to move that to more recurring maintenance service kind of business with their Aura IQ product, the existing business that's going to remain in the business is going to be a little bit lumpy. And we don't know exactly what the profits will be going forward. And, because of that uncertainty, if we make the adjustments that I was talking about before, it perhaps has, after this capital return, a 60 million market cap, and maybe, 4-6 million sort of EBITDA that it could get in the next couple of years. So it's not too expensive. And what we have to consider here is that the company is also buying back some of its shares. And given that there's reasonably good alignment with the board, you'd have to say that probably means that if they're taking the long-term view, they think the company will be growing profits, notwithstanding the lumpiness of it. They mentioned a couple of years ago they had a big major contract for their locking business that they were trying to get, which hasn't come through yet. I think as recently as May, they sort of said, that's still in the pipeline. The locking part is the end of the contract. So, it still might take a while for that to come through. If that comes through, it should be a good profit boost. I think that overall, even though I don't own shares in this myself, I suspect is as a long-term holder, I suspect this is actually probably undervalued. The company is behaving in a way that suggests to me that they think that the stock is long-term undervalued. And so, I would probably tentatively call this a buy, just with the caveat that it's not quite one of the most compelling ideas, so I don't own it myself.
Oh man, you know it very well for someone who's just on the sidelines there. Carl, what do you reckon? So AVA provides security for its customers. Can it provide any security for shareholders?
Yeah, well, it's all about risk, isn't it? Risk is in the name and risk is in the nature of the investment. And I think it's, as Claude says, it's kind of management versus the market at the moment. So management, putting the company's money where their mouth is, and they're buying back shares. Not a huge buyback, but about $1.5 million. It's largely complete. Obviously, we've got the capital return coming as well, which is interesting that it's $42 million they're going to send back to investors, and you would have hoped that they would have been able to find some more things to do with it, but it doesn't seem to be the case. You mentioned, management has a fair bit of skin in the game. They own about 20% of the companies. That's always good and something that's very attractive to us. We had, I know, Andrew, you're a holder. I know Claude's researched it in the past. We actually put this out as a buy back in February. It was about 62 cents a share. So it hasn't done, we haven't done too well on that one, but, it was just on the basis of just how much momentum they had. And how well we thought, they've got some nice diversification spread of businesses there. Now, for us, they've sold a pretty key component of that business in that services division, because that was kind of the stability that I think allowed them the great foundation to then go and chase some of these other contracts in the technology side of the business. So they have sold that off, which is a little bit maybe frustrating for us. And if you look at their last quarter report, it was the best performing segment, and it's gone. So it does, and like I said, at the start, it's all about risk now. So it makes the earnings lumpier. They've lost about half of the profits, and they're going to be about 24 cents compared to 40 cents. Look, we still like it, having said everything I've said, and we still think the valuation is not pressing. It's still quite attractive. Forgetting the capital return and assuming it's about 40 cents now. Look, we think it's probably worth closer to 60 cents than where it is now, but the chart is not agreeing with us, and that's where, and this is the reality of investing, isn't it? So that the management thinks the company's pretty good. We think the company's pretty good, but the market doesn't. Either we're right and the market's wrong, or we're wrong and the market's right. And I'm in the latter camp there, where the market is always right, Andrew. You know my philosophy on trading. So on that basis, look, if you've bought it based upon our recommendation early in the year, I think there's enough in the chart to hang on to it. We're seeing quite a bit of support coming around that sort of 35 level. It's been reinforced over the last couple of days with some nice white candles and a little bit of volume. So there's enough there to hold it, but I can't call it a buy for new investors right now.
Yep, no, fair enough, Carl. So we'll put you down for a hold there.